Let's look at the papers. So we discussed advantages in inflation. So disadvantages in inflation is it undermines the ability of money to act as a store of value. Since inflation erodes the purchasing value of money. That means erosion of the real value of currency. When we are talking about money, there's nominal value and real value. Nominal value is the official value of the currency. If we take 1,000 bill, the nominal value is 1,000. That's the official value. But when nominal value adjusts with the inflation rate, that is called the real value. So the problems of inflation is number one, erosion of value. The second one is extremely high rates of money inflation cause the money to lose it as a medium of exchange. If the inflation rate is so high, hyperinflation, that causes Zimbabwe economy, the inflation rate before they abandoned their domestic currency, the inflation rate stood at a staggering 1 million%. 1 million. So Bank of Zimbabwe issued ultimately 100 million check as notes for the public to avoid their situation, but unfortunately it lost the people's trust as a medium of exchange, and they tend to go back to the barter system, which is exchanging of goods to satisfy their needs. Extremely high rates of money inflation cause the money to lose it as a medium of exchange. So extremely high rates will eradicate use of money as a medium of exchange. Unexpected inflation causes an arbitrary redistribution of income and wealth from lenders to borrowers, because lenders will not benefit from inflation because they get less amount of money after the maturing period. Because of the inflation rate, they get lesser amount of money, and lenders who have lent on fixed interest will lose the real value of money when the borrowers give back their money with the fixed interest rate. They will still lose the real value of money they have given the borrowers earlier. While borrowers such as government and net corporations, borrowers benefit because the real value of their repayments have come down due to inflation. Losers of inflation will be pensioners who are receiving a fixed amount year by year, and EPF insurance brokers. The problems of inflation is uncertainty. Investors and business community will be discouraged to enter into a long-term contract that are expressed in monetary terms, since the value is affected by future inflation and the uncertainty of future cash flows. They tend not to invest in the economy. That will cause lower efficiency of resources in the country, and eventually it affects the overall GDP effect. Inflation illusion. Well, this is an interesting point because people feel inflation much higher than the actual level. It's called inflation illusion. That's a psychological and economic term, because inflation illusion, people tend to think only the falling of real value of their income due to the increase in prices. They neglect to think that the wages and salaries are increased with that inflation rate. They are not adjusted quickly with the inflation rate, but they tend to think falling of real value of income is due to the increasing much higher rate of increasing prices. Cost of having to change price lists, vending machines. Also, people will have to incur cost to search new prices, research new prices, for a product, adjust the price levels. It costs time and opportunity and expertise, knowledge cost for the producers. So domestic export products will lose competitiveness because the production cost will increase, so they have to price the product much higher. This will decrease the competitiveness of that product, which will affect the current account balance of the country, GDP, which will be affected. And boom bust economic cycles, that's a relative disadvantage of inflation. High inflation growth is unsustainable, is usually followed by a recession because the producers are reluctant to produce. GDP goes down. If the GDP goes down, this will cause a recession. That means devaluation of gross domestic products in a country called a recession. So if the producers are reluctant to produce in a high inflation rate, that will cause a negative impact on the economy, resulting in recession. Fiscal drag, because if people will get higher salaries, higher interest rates, normally price ranges, price brackets will not get adjusted simultaneously with the inflation. Amount of tax we pay will increase because we will go up the ladder in the tax brackets. We will go to a higher tax bracket and we will have to pay more tax because inflation goes high and the interest rate goes high and our salaries go high. We will have to pay more tax.